Good afternoon, executive management, distinguished partners, investors, and analysts. Ladies and gentlemen, welcome to the Unite Capital Q1 2025 Investors and Analysts Call. My name is Bisola Boran. I am the Communications Manager at Unite Capital Group and the host for this session. The Investors and Analysts Call provides an opportunity for us to discuss our recently released financial performance and share our outlook for the rest of the financial year. Leading this call is our Group CEO, Mr. Peter Ashade, and joining him are the Group Chief Financial Officer, Mr. Shejako Nakoma, and other members of the Unite Capital Executive Management Team. Before we delve into today's session, let's go over a few housekeeping rules. Please be aware that this call is being recorded and all participants are in listen-only mode. If you have any questions or comments, please use the Q&A box located at the bottom of your screen. All enquiries will be addressed during the Q&A segment following the presentations. I would also like to emphasize that certain statements made during this call are forward-looking, involving risks and uncertainties. These statements are based on our assumptions and projections, which may or may not materialize in the future. Therefore, it is possible for our actual performance to deviate from expectations. Neither United Capital Group nor any of its associates or employees can be held responsible for these possible deviations. Once again, thank you for your participation and cooperation. That said, it is my pleasure to invite the Group CEO of United Capital Group, Mr. Peter Ashade, to deliver his opening remarks. Good morning, Mr. Ashade. The floor is yours.
Thank you so much, Bisola. Thank you immensely. Distinguished ladies and gentlemen, good afternoon. It gives me great pleasure to welcome all of you as we take this quarter investors and analysts call, where we shall be reviewing our group performance and also for the period ended 31st March 2025. And later we'll now give you snippet into how we see the outlook for the remaining part of the year. Permit me to say here that we will look at briefly our group and how we perform in terms of the portfolio within the group. Later, I'll give room for the Group Chief Finance Officer in person of Mr. Shejako Nakoma to take us in detail into the financial result. Thereafter, I will come back to now take us into the expectation for the remaining part of the year. Well, may I just, tip it here that I can assure you we're quite positive about what the year holds. So welcome as we journey along. So looking at the group structure at a glance, again shows the way we are structured in terms of our businesses. As you could see, all our key business line from the investment banking, which happens to be the flagship, to asset management business, security business, trust business, consumer finance, wealth management, and our new kid in the block, UC Bank, which we are excited. And when I get there, you'll hear more about that. So that, again, gives the highlights of the group and each of the businesses, and may interest you to know that hitherto 2 years ago, all our business lines were reporting strictly to one regulator, that is Security and Exchange Commission. But as we speak now, we now have two regulators, the Central Bank of Nigeria and the Security and Exchange Commission. Again, underscore the growth that we have experienced as a group. Following this, we look at our impressive achievement as a group. Our gross earning grew 113%. You agree with me that the operating environment, which I'm going to get to later in this presentation, are quite very, very, very volatile, even more than what we could. But even at that, we ended at 113% growth to pin at 13 billion. And our PBT rose 65% on year to end at 6.7 billion, almost roughly 7 billion, as it were. Total assets increased 1% to 1.72 trillion. As it were, all this within the period under consideration. Our fund under management crossed the 2 trillion mark. It's just like quite exciting. Some couple of years ago when we, do hold our investors and analysts call and we're saying we are 500 billion. At a point in time, we say we are 700 billion, then we're 1 billion. Today, I'm so happy and excited to inform you that we have crossed 2 trillion, even at the end of March 2025. The shareholder fund rose 21% to peanut 161 billion as at that. Again, while we acknowledge that the sector we operate rating is quite very, very key. We have maintained our investment rating at A- from Augusto, which is quite very important for us. And we hope to even improve on it as we set up to grow in the years to come. Next slide looks at journey so far. As you are aware, we as a group we pride ourselves as one of the oldest investment banking and financial services group within African space. We are this year 61 years old. But what we have tried to brought out here is just a snippet into our operation between 2000 till date and key milestone that we have achieved in the journey so far. I won't bore you with that. This presentation will be available for your review even after this session, which you can have access to and ask any question and keep them coming as it were. The next slide speaks to our core value. We are always very proud, because when you see the successes that have been recorded and the growth that underline this speaks to these are core value, the enterprise, the excellence, the execution, which is quite very critical. We can't but continue to stride on the wing of these core values of us, which we pride so much to our heart. Next slide speaks to our leadership. So again, we talk about our people. They've been over our success, very strong behind our success line, and we always, and this starts from the top line. It starts from the top line, and from the top line down, our leaders, you can see all the CEOs of our key businesses and leaders across each of the group share services, as it were. The combination of this that present over 250 years of experience as far as this space is concerned, give us a confidence of diverse background, diverse experience that has helped us as we navigate each of the year that we come here to present and quarters that we come here to present our growth trajectory. And so from here, I'll be taking us through the milestone, the key milestone that you'll see. We'll start from our investment banking business, which we pride ourselves as one of the lead across, and is unequivocal in terms of that. We've seen that in terms of the key transaction and milestone that we have achieved just in one quarter. We just tried to cherry pick just few out of so many. But one thing that has been underscore our growth, there is no major transaction as far as this space is concerned. Nigeria, even is going Africa now, that our investment banking business will not participate in. Again, this underpin the leadership role that we have played, that I will continue to play, as it were. We have several, if I may just mention some. In terms of that, we acted as a joint lead issuing house and arranger for Dangote Cement, and you know what Dangote Group means as far as the Nigerian economy is here. Lead arranger to John Vent, 10.52 billion series. Again, lead arranger to Cross River State Bond, also part of the joint issuing houses to First Bank offer, and some others as you see in the presentation, which will be made available. From there, we move to our asset management business, and truly a landmark achievements as it were. We are within the quarter, we cross our AUM, that is assets under management, cross the 1.2 trillion. It might interest you to know, a couple of years down the line, we're really struggling at 15, 20 billion. And now looking back, we're talking about 1.2 trillion, which is significant growth for us. And when you look at it in terms of our CIS, that's a mutual fund, a total mutual fund that we have 10 now, has crossed 600 billion as it were. Total mutual fund has cost 600 billion as it were, which is quite very, very significant in terms of our growth. In terms of growth, we successfully scaled the newly launched United Capital Stable Income. If you recall, last year we launched United Capital Stable Income Fund, and now 1 year down the line, or year on year, we have grown 100% to pin at 19 billion. 19 billion is, and we are still growing. And what is happening in our asset management business is a combination of excitement and new initiative that is playing out, and we're quite very positive about what the future holds. In addition to that, consistently, as we speak now, our 3 of our mutual fund out of 10 mutual funds, 3 of them have crossed 100 billion mark. These are, for us, they are landmark achievement. They are landmark achievement, and this again underscore most of the numbers that you see when you see numbers over 50% percentile growth, and is that we just crossed 100 billion mark, which is quite very, very key, and it's exciting for us. We will continue in this business to drive our leadership, market leadership. We ended the quarter at number 2, top 2, number 2 largest asset manager in Nigeria. We will continue to drive it, believe in it, and we are positive about what the growth and the future lies. In our trust business, which comes next, our trust business clearly a leading trust business in Nigeria, the oldest, by the way, and the leading trust business in Nigeria. We've grown on a year-on-year. Our asset under management have grown 6% to pin at 195 billion. 195 billion, with a clear focus on our private trust portfolio that equally grew at 6%. And within a quarter, we're able to secure 14 new corporate trust mandates. For those that really have a better understanding about trust business, they will tell you how it's not easy to have these 14 within just 3 months. But again, that underscored the leadership role that we have played. Moving from there, we talk about security business, which is again dear to our heart. We grew our revenue by 61% on year, and our profit before tax by 35%, respectively. We'll again, an exciting moment as far as volatile as the economy is, and even most of the projection that we have for the corporate in terms of the element we see in this business, that's security business, hoping that the market will be elevated. But it didn't work out. But even at that, we're still able to underpin significant growth compared to year-on-year. Our clients grew by 51%. Again, driving using technology is paying off, and we could see the impact as it were. We ended the quarter at number 12 in terms of value, and number 13 in terms of volume. We're quite having an eye on that. That's the board. We're having an eye on that. We are looking at the interplay of all these factors to ensure that while we become profitable in terms of value impact, in terms of volume impact, we'll still continue to lead. On our wealth management business, which the next slide, wealth management business, on a quarter-on-quarter, again, a success story. We grew our assets under management by 27% on year to pin at 300, and that's 400 billion naira as at the end of the quarter. Two of our key products, that UC Prestige, grew by 87% on a year-on-year to pin at 372 billion growth, while our UC Octus, this grew by 68% to pin at 7 billion, as it were, 7 billion as the end of the quarter. This is again very critical for us, and we continue to drive the growth as we see in this line of our business. Our microfinance business, exciting news for our audience. Exciting news. I recall some couple of quarters. In fact, there's some apprehension. Why do you want to go into microfinance space? A lot of risk there, highly regulated and all that. And I recall then that we give assurances to our audience that yes, just calm down. We know what we want to do. We have the blueprint. We have the strategy. We want to play in this space. I'm happy to tell you that within one year, we've grown our loan portfolio by 40% to 2.1 billion as at the end of the first quarter. Our customer base has grown by over 46% just within 1 year on the heels of using technology to drive our processes. To crown it up, our portfolio at risk remain well below the 5%, which is the regulatory mark that has been given. I want to assure you, forward-looking, clearly, we know the strategy and what we want to play in this space, and we'll continue to do that. On our consumer finance business, which I have always been talking, it's been an exciting news also. We recorded a disbursement of over 53 billion, and that is 262% growth on a year-on-year. You could just imagine that. 262% growth on a year-on-year. Our new Cash Now, we had a relaunch, a refresh about that. Within the year, we grew our profit before tax by 215% to pin from 250 million in 2024 to 778 million in the first quarter of 2025. Just imagine that's a consumer finance business. And, for us, again, it's about business decision. We found ourselves here. We're excited about what is happening, and we continue to drive this growth as it were. Going from there, we just look at our awards and recognition. Within the quarter, you recall at the tail end of last year, our trust company, our trustee business, was awarded the best trust company in Nigeria by NGS Mid of Africa Award. This is dear to our heart. We're excited about that. We are happy about that, and we can assure you that will continue to sustain this trajectory and in terms of growth, even across all our business lines. Again, we are recognized the book runner as the lead issuing house coordinator for West Africa Deal of the Year. You all recall that last year, the first foreign denominated bond by the federal government that we have in terms of coordinated. It was awarded West Africa Deal of the Year by Global and Market Award Africa. This again excites us and keeps us doing more. We know it takes more to sustain success than to get to success. So we will also, try as much as possible to ensure that we keep this level going. And so having given you the synopsis into how each of our business line has gone, so I'll just quickly take you through what the operating economy environment was in that quarter and what we see in the operating environment. You agree with me, all of us started 2025 on a very cool note that yes, this year 2025 is going to, well, alas, upon the inauguration of dear President Trump in the US, and within 100 days, you could have seen all what happened, signed almost 100 executive orders within a short period, which again turned everything all around, all postulation, all projection, turn the other way around. So again, it gives a very volatile operating environment across the world. You know the impact of US, and this Nigeria is not isolated. The tariff war that affects economy, because of that, IMF had to come at the heels of early Q2 to slash the growth and that. And we expect that to come more, because if Trump continue in this manner, and we expect that to come, because it's becoming more difficult to even project into the future, because a lot of factors that you require for projection keep changing by the day. So which is quite very key, and how to change. I am projected a 3.3% earlier. I had to come to, reduce it to 2.8 now globally for the year, which is very key. And again, that underscores that in terms of exchange rate across that within the something, the US again fell 6-month low against the euro, as investor offloaded US assets. What the impact of all this pronouncement by Trump, and was generated that something. And the greenback has been weighted down by uncertain growth, the outlook that you see across there. And in Asia, China, they pledge more financial stimulus. The impact of the tariff, definitely there is going to be cost push, impact, high inflation that is going to come in those countries. So this was being affected significantly. So they come in with stimulus to ensure that they're able to stabilize the tension that is being created by United States. And coming down to Nigeria, our GDP that was projected to grow by 3.0 experienced 0.202% decline when IMF came up and rebalanced the projection from 3.2 now to 3% growth that we're expressing expecting. The government reforms, including market-based pricing, which changes that occurred now. They pay for the crude oil in naira, and all these things are the way it affects both, even in terms of FX generation for the country, even also the availability of the fuel, as it were, in the country. The naira depreciated 0.07%. Compare the official rate within the quarter, when you see what happened that, and it continued to depreciate. What, as of today, we're close to 1.7. I think as at we are now over 1,600, which is again a huge depreciation when you look at where we ended last year. In terms of oil production, the oil production decreased from the data from OPEC. Decreased to 1.40. You recall at the early 2024, we were even as high as 1.6 from the OPEC data. We're at 1.6. And the implication of this. And this is the environment within which we operated in the first quarter of the year till March. And that. Again, the subdued oil production level affected the whole thing. Inflation, agree with me, we had a rebase in terms of inflation. A rebase in terms of the inflation base year due to the rebasing, resulting in drastic drop in inflation from 3.4 to 2.4. But alas, resulting from the interplay of the global, U.S. pronouncement by Trump and all the effects, lower oil production and all these things, we eventually find ourselves on the increase, rise in the inflation again from 23.18 in February to 24.42 in March. Going by also on monetary policy, the monetary policy, MPC retained the rate, and we're expecting another meeting will be coming this May. Hopefully, let's wait and see. We're folding our hands to see what that. In terms of capital market, our capital market, it showed resilience in Q1, because as at end of Q1, again, 2.66% amidst, broader negative market sentiment, which happened. And it's important to note that the NGX market cap rose 6% to 66.2 trillion as at the end of the quarter. The fixed income market, federal government offered a total of 1.1 trillion bond in Q1, significantly lower than 3.3 offered in Q1 for 2023. Again, a lot of policy changes and the direction of government keep coming. So these are the environment which we operated. Sincerely, I said at the beginning, quite volatile. We'll continue to do that. At this moment, I would like to yield the floor to our Group CFO, Shedrack Onapoma, to take us through the group financial results for the period ending 31st March 2025. Thank you.
Thank you very much, Mr. Peter Shade. I will now take us through the review of the group's performance for the period ended 31st March 2025. Let me start with a quick overview of our financial performance and financial position during and at the period ended 31st March 2025, as displayed on the screen. We recorded a gross earnings of 13.1 billion during the period under review. This compared to 6.14 billion recorded in Q1 2024, represent 113% year-on-year growth. We achieved this impressive growth even in a very turbulent economic environment, just like Peter alluded to. We operated in a very, very tough environment, and yet we were able to turn out 113% year-on-year growth in gross earnings. Profit before tax went up 65% from 4.09 billion in Q1 2024 to 6.73 billion for the period ended 31st March 2025. Profit after tax, we achieved 5.8 billion during the period under review, compared to 3.59 billion in Q1 2024, representing 64% year-on-year growth. Total assets went up marginally by 1% year to date to 1.72 trillion from 1.7 trillion as at December 2024. Our total liability closed at 1.56 trillion compared to 1.57 trillion as at December 2024, representing 1% marginal decline year to date. Our shareholders' fund went up 21% to 161.52 billion compared to 133.5 billion as at December 2024. In fact, this is a demonstration of our commitment to improving shareholders' value. The next slide gives a highlight of our income statement for the period ended 31st March 2025. As earlier mentioned, we grew gross earnings by 113% year-on-year. This growth was driven by the following revenue lines. Fees and commission income went up 73% year-on-year. In fact, Peter spoke about some of the transactions that we were able to close during the period under review. This accounted for the significant growth that we recorded during the period under review. We closed fees and commission income at 4.46 billion as at 31st March 2025. Investment income closed at 6.41 billion, contributing 49% of the total revenue for the group during the period under review. Net trading income went up 138% year-on-year to close at 1.5 billion. However, we saw a decline in other income, which dropped to 288 million. And this is a reflection of the currency market during the period under review. Looking at our expenses, it is important to highlight that we operated in an elevated inflationary environment, even as we continued, to expand our business reach across the various regions. This drove our operating expenses up by 114% year-on-year. Now, the operating expenses, we saw 62% growth in personnel expenses. We closed at 1.51 billion. Again, we're able to engage additional hand, to strengthen, the group for growth. We recorded 138% growth in other operating expenses, which closed at 5.05 billion. We also recorded an impairment charge during the period of 311 million naira. This led to a profit before tax of 6.73 billion compared to 4.09 billion recorded in 2024, representing the 65% year-on-year growth, during the period under review. Profit after tax grew by 64% year-on-year, to close at 5.89 billion during the period under review, compared to close at 5.89 billion compared to 3.59 billion recorded in Q1 2024. If you move to the next slide, I'm going to take a deep dive into, the various revenue lines. And I'm going to spend some moments here, to break this down further. Now, fees and commission income grew by 73% year-on-year to 4.46 billion during the period under review, compared to 2.58 billion we closed with in 2024. And this revenue line accounted for 34% of our gross earnings, compared to 42% in prior year. Now, this revenue line grew on the back of the growth in our mutual funds. Peter explained, that we've been able to ramp up the number of mutual funds, that we have introduced into the market to about 10, and we're still counting. So the growth in the mutual funds significantly drove our fees and commission income, as well as key mandates that we were able to close during the period under review. Peter outlined some of the deals that we did during the period. This significantly drove our fees and commission income, as enumerated here. Now, this income line is very, very critical to the group, and we intend to continue to drive growth and the contribution of this line of income to our gross earnings. We also delivered exceptional growth of about 491% year-on-year in net investment income, which went up from 1.08 billion in Q1 2024 to close Q1 2025 at 6.41 billion. This income line contributed 49% to our gross earnings in Q1 2025. In 2024, it contributed 18% to our group earnings. Now, we were able to achieve this despite the fact that margins were thinning out during the period under review. However, we were able to grow our asset under management to ramp up our revenue. This is another major contributor to the group's revenue. And in the coming months, we intend to aggressively drive growth and contribution from this revenue line. Net trading income rose by 138% year-on-year, from 632 million in Q1 2024 to 1.5 billion in Q1 2025. And this income line, accounted for 11% of our gross earnings during the period under review, compared to 10% contribution in prior year. Now, we see great opportunities for improvement in active trading, and we believe that we will be able to sustain the growth recorded so far in this revenue line in the coming months. We are going to be leveraging on these opportunities to ensure that we continue to grow our gross earnings. Let me quickly jump to our financial position, the next slide, just to give a quick highlight. Total assets increased marginally by 1% year to date to close at 1.72 trillion. We saw a decline in total liabilities, which dropped by 1% to close at 1.56 trillion. Our shareholders' fund, as earlier mentioned, went up by 21%, and we're excited by that level of achievement. I will do a deep dive in subsequent slide. Let me just jump to that, looking at the assets and liability mix. Now, our cash and cash equivalent, though dropped by 9%, continue to, contribute significantly to our total balance sheet size. We're currently at 18%. The cash and cash equivalent is currently at 18% of the total assets. We intend to continue to remain as liquid as possible to ensure that we are in a position, a very strong position, to continue to meet our customers' need as and when due, and at the same time ensuring that we drive strong return on investment. Our investment securities went up 9% during the period under review year to date, but also contributed significant 70%, accounted for 70% of our total assets. Now, at 70% of our total assets, we believe that the current mix and the position of our investment security positions the group to significantly drive growth in revenue, because these are revenue-yielding assets. Trade and other receivable accounted for 9% of our total assets as at 31st March 2025, compared to 9% contribution as at December 2024. Now, a critical point that I would love to highlight here is the fact that 98% of our total assets are in income-yielding instruments. This is very important for us as a group, and we will continue to maintain this position going forward. Looking at the liability side of the balance sheet, I think the key thing to highlight here is the fact that our managed funds grew by 21% year to date. Now, this is very, very significant because this is a major component that drives our revenue generation. So growing by 21% is quite exciting, and we intend to continue, to drive this growth, as we go into the year. Ladies and gentlemen, let me quickly jump to the next slide to discuss our key ratios. Now, earnings per share rose by 64% year on year, from 80 kobo to in March 2024 to 131 kobo during the same period 2025. This is due to the 64% growth in profit after tax. Again, this is a strong indication that we have a very strong earnings performance, and we intend to continue to drive this performance, as we go into the year. Return on assets grew by 0.29 percentage points year on year, from 1.09% in March 2024 to 1.38% in March 2025. Again, clearly, this is showing an improved asset utilization during the period under review. Price to earnings increased by 138% year on year, from 0.77, that is 77 kobo in March 2024 to 1 naira 84 kobo during the period under review. Net asset per share grew by 21% year to date, from 7.42 in March 2024 to 8.97 during the period under review. Again, this is showcasing, growth in shareholders' equity, which has been the hallmark of our group. Return on equity rose by 3.18 percentage points year on year, from 12.8% in March 2024 to 15.98% as at March 2025. We continue to drive strong profitability. And again, this is also an indication of effective asset utilization. Ladies and gentlemen, we are excited with the way we have started the year, and we plan to continue to drive even better performance as we navigate the current global and local economic climate. At this point, I want to thank you for listening, and I will now yield the floor back to the Group CEO, Mr. Peter Ashade, to take you through our outlook for the future. Back to you.
Thank you so
Peter.
much. Thank you so much, Shadrach. Well, without much ado, we're particular about timing, and we need to yield the floor to at least take some of the questions that we have. But permit me to quickly, within some 2-3 minutes, looking at our corporate strategy, as it were, for the remaining part of the year. One thing that is key, and we don't deceive ourselves at all, it is we see an elevated, challenging operating environment. There's no two way about it. However, as a team, we are positioned and determined more than ever to ensure that even amidst this, we extract value, even within the challenges that we see. There will definitely be markets, regardless of that. And there will need for the need for the products and services in the market. So we are here, regardless of anything, to ensure that we succeed, even amidst the challenging environment that we may encounter as we go in the year. Some key core pillars, as shown in the slide before you, which we're going to pursue as we go. One, market leadership in terms of market and product leader across all our business segments. That we will not compromise. Customer experience. My interest too, we are funding our customer experience architecture with today's technology to service the growth that we see in the online customer segment that we're focusing on. Also, we're going to focus on sustainability. My interest too, now we have a full department that is going to be focusing on ESG. And, sustainability has come to stay. And because of the nature and the same way we grow, we want to operate and ensure that we are socially responsible and will continue to contribute, quota positively to the future generation. Digital transformation, the adoption of cutting-edge technology to drive all our business efficiency, streamline operations, drive scalable growth, which is key. Risk management, we will not in any way underplay the impact of risk, because it is upon this foundation that we sit as we grow. As we grow, we look at other exciting opportunity within Africa. Our risk sensitivity will continue to elevate it to ensure that we have a very robust and certified risk framework within which we assess ourselves. Last but not the least, happen to be our people and culture. Our goal is to cultivate high-performing, and inclusive, value-driven workforce. We're doing everything possible to ensure that we carry all our team along as we do this. We are committed to attract the right team members, retain the best talent within the sector. And finally, looking at what in terms of the next slide. So this next slide shows our key strategic initiatives to drive the sixth core pillar. And without much ado, just to take that so that I'll be able to end to give time for questioning. We're going to engage in more strategic partnership, operational efficiency, business expansion to look at opportunity both in Nigeria and in other African space. growth in our fund under management, financial inclusion, a lot. You're going to see a lot from the stable of United Capital in the next 2-3 months thereabout on this. Sustainable financing, which again enables sustainable practices in our business operation through ethical investing and sustainable financing initiative, which is quite very, very important, is another focus that we are going to play. On this note, let me yield the floor as we take the question and answer from our audience. Thank you so much for taking your time to be part of this session today. Now, Bisola, hand over to you.
Thank you very much, sir. Thank you very much, Mr. Peter Ashade. Thank you, Mr. Shedrack Onakpoma, for your wonderful presentations. I think everybody on the call can actually agree that this is quite refreshing to see how well we've performed across all business lines in light of the operating environment. And also very exciting to see the plans we have for the rest of the year. We already have questions coming in, and it's time for the Q&A segment. So please, if you haven't sent your questions, please send them now. I will try to take as much as possible within the allotted time frame. I'll start the questions now. The first question we have is from Onome. Unfortunately, Onome, I don't want to butcher your surname, so I'll just go with the first name. Onome wants to know what drove the jump in your general and administrative expenses. And there's a second part of the question. Any update on Pan-African expansion? So the first part of the question, I'll hand to the Group CFO, Shedrack Onakpoma. And then the second part on Pan-African expansion, I'll hand over to the Group CEO, Mr. Peter Ashade. Over to you, sirs.
Okay, thank you very much, Bisola, and thanks, Onome, for the question. You will agree with me that we are operating in a very, very pressured and economic environment. When I say pressured, we are pressured from two angles. One, we are pressured from inflation. Two, we are also pressured from the devaluation or depreciation of the naira, so to say. And in addition to that, as a group, we are also growing. We are expanding. We're growing into regions. We are having our footprints, across Africa, and all of these require some level of spending. So we're traveling and all of that. And all of this is to position the group, for greater growth in the future. So I will summarize by saying 3 things drove the growth in our general and administrative expenses. Number 1, inflation. Number 2, the depreciation of the naira, because we have some licenses that we are paying in foreign currencies. And by the time you translate using the current exchange rate, is significant. And then number 3, we are also positioning ourselves for growth, where we are hiring more people. We're going around the country, expanding into the regions. So all of this accounted for the significant growth in general admin expenses that we have presented today. Over to you, Pierre.
It's okay. Thank you so much, Shedrack. So in terms of Pan-Africa expansion, what I can say here is we are on course as into our Pan-Africa expansion. In due course, you'll be getting, in fact, in less than 1 month, you'll be getting some development, as it were. We were saying this as a last year, we confirmed we got an approval to operate in the WEMO region. WEMO region is 8 African countries, so we already, have a license to operate there. That is just one of so many opportunities that we see in Africa. So we're on course and we're still pursuing it. And I'm very sure by the time we'll be having this time of a session at the end of Q2, we have a lot to put in terms of Africa expansion. Thank you.
Thank you very much for that, Mr. Peter Ashade. We have a question like that, but I think we can give this one over to the Director of Regional Operations Africa to answer. It's pretty similar to the first. Good afternoon, UCAP. I want to know if United Capital has fully started operations in Côte d'Ivoire, and are there plans of expanding businesses to other African countries during the year? Over to you, Mr. Ejikeme Okoli.
Thank you, Bisola. And writing off comments from the group CEO, Mr. Peter Ashadi. Yes, we have commenced skeletal operations in Côte d'Ivoire, but we'll come to the general public once we go full scale, especially when the business has been launched officially, being a highly regulated entity, especially in the West African Economic and Monetary Union. Are there plans to launch in other parts of Africa? Yes, starting from where we have currently entered, which is West Africa, the WAMU zone, comprising 8 countries. So we've commenced in Côte d'Ivoire. There are plans to also commence operations in other, should I say, economically attractive countries within the WAMU zone. And through partnerships and other entry strategies, we also have key hotspots across Africa that we are already penetrating. And a lot of this will be unveiled in due course. So thank you, Pan-African Expansion Drive. It's taking the course which we want, and you can be rest assured that it's contributing significantly to value creation for the group. Thank you.
Thank you very much. Very well answered. We have another question. This one is for the group CEO again, and everybody's favorite topic, dividends. And this person wants to know what percentage of dividends should be expected to be paid out as interim versus final. It was 37.5% of dividends as interim for full year 2024.
Thank you. Thank you so much. Everyone wants dividend. Even where I see it, I'm equally one of you, a major investor in this company, major as a major. So if opportunity will give dividend at all. But one thing I want to clear is that, yes, we have a dividend policy, which we have strongly been supporting and be implementing over the years. Last year, when, the direction of things determine whether I want to pay the interim or final. You recall last year was the first time, even in the history of the business, I'll pay an interim dividend. So this year, we're looking at the direction of events and our performance, as it were, and to now be able to land there. One thing I can assure you, we have always highlighted the fact that all our operations strategy is tailored towards advancing improvement and increase in the wealth of all our investors. So be rest assured that we have a mind to look at that. We can't be saying now that whether it's going to be 40% or 30% or 25% or thereabout. But one thing that is key, critical decision that is going to affect this positively at the appropriate time, it will be communicated. But be assured that your interest is fully, taken care of. Thank you.
Thank you, sir. We have one more question. Well, we have more questions, actually. This one is on shareholders' funds. So pass it to the group CFO, Mr. Shedrack Onapoma. And it says, "Good day, United Capital. I would like to know what is responsible for the growth in your shareholders' fund and how do you intend to sustain this going forward?" Over to you, sir.
Sorry, my mic was mute. Yeah, thank you very much for that question. So to answer your question, there are two things, that accounts for that accounted for the growth in our shareholders fund. The first of it is the growth in our fair value reserve. We grew fair value reserve by 37%. Yeah, I think, we closed at 115 billion, during the period under review from 84 billion, right? Now, the fair value reserve is an aggregate of all our, the growth in our OCI assets. That's assets that we carry at fair value through other comprehensive income. So that is one growth area. The other growth area is in our retained earnings. However, during the period, ordinarily the retained earnings should have grown by 64% because we grew profit after tax by 64%. But if you recall, during the period, we also paid dividend. We paid dividend of about 9 billion. during the year under review. So that reduced our retained earnings. I don't know if that addresses your question. Thank you for the question.
Thank you. I hope that answers the question as well. We have another question here from Michael Omubo. And Michael wants to know, thank you for your presentation of the facts behind the figures. What is your growth projection for the next 5 years? I'm going to hand this over to the group CEO, Mr. Peter Ashade.
Well, if you ask our next projection for the next 5 years, if you listen to me very well, projecting to the future now need a crystal ball, because the level of volatility that you see in the environment. I recall when we're ending 2024, most of the projection and everything, first quarter, everything went down. So we had to start picking up again. I recall that, growing, in my career, you want to look at 5 years, 7 years, and 10 years. But things are changing now. People are looking at lesser number of years, 3 years, 2 years, because the data keeps changing. But one thing I can assure you, we are focused, we are determined, we believe in this market, we believe in Africa, we see opportunity, and we are poised and positive about what lies ahead. Thank you.
Thank you, sir. This is another question for you, so you can just hang in there. This is from Rotimi Oyelere. And Rotimi wants to know, is there any plan to raise fresh or additional capital to strengthen United Capital in view of the federal government's $1 trillion economy targets?
Definitely at certain point in time, looking at our growth. If you follow our growth in the last 5 years, it's been very strong. At a point in time, we will. For now, we cannot say there is no plan in place for now. And we'll talk about capital. It could be in different form, either tier 1 or tier 2. It could be either. The growth trajectory we see, which just like we said, the asset under management, peanut over 2 trillion as at the end of the first quarter. So we know our projection for the next of the year. So, but be rest assured that we have all these indices monitored, and at the appropriate time there will be action that will trigger that. You agree that even going Africa is not cheap, and a lot of this will speak to what we have and how we want to drive our Africa agenda, as it were. So definitely at the appropriate time we know that. But for now, there is no specific policy or there's no specific pronouncement or strategy around that. Thank you.
Thank you very much, sir. And we'll take the final question. And this one is, this person wants to know about UC Microfinance Bank. And the question says, will UC Microfinance Bank operate completely digitally, or do you plan to roll out physical branches at some point? I'll hand this question over to the MD, Esther Adiola Balogun. Over to you, ma'am.
All right, thank you very much, Bisola, for the question. UC Microfinance Bank is a digital first microfinance bank. So all our products will be sold digitally. We are going to be a mix of the hybrid model. That's a bank that is focused on digital first. Then only branch as at today would be in our head office in Lagos. Thank you.
Thank you. Okay, I know I said that was the last question, but we got another question about the investment banking. So I'll hand this over to Dr. Gbadebo Adinrile. And this is a question. This person wants to know, does UCAP have any plans to go into the venture capital or create a VC fund? Over to you, sir.
Thank you very much, Bisola. And yes, it's a space that we're monitoring as part of those alternative or specialized funds area. It's a space we're monitoring, and as we look at the market and see the opportunities, we'll come up with our views on that. But we are looking at that space, VC funds, PE funds. Those are spaces that we're looking at. As you know, a few years ago, the infrastructure fund was set up, which is also in that alternative fund space, and that is also growing. But just to say that it's a space we're monitoring, and we'll come up with our views on that. So we'll crystallize that in due course. Thank you.
Thank you very much, sir. Thank you everyone for participating in this session. Thank you to the executive management. Thank you to everyone who attended, everyone who asked questions. Unfortunately, we can't take all the many questions in the Q&A box right now. However, as we usually do, you can forward your questions to investorrelations@unitedcapitalplcgroup.com, and one of our trusted advisors will respond accordingly. We'll also send you communications so you can access our financial performance and access the presentation, and also ask any questions you want us to answer. You can also visit the investor relations section of our website for more information. Once again, thank you very much, everyone. I will now hand over to the group CEO to give the closing remarks.
Thank you so much, Bisola, and thank everyone for taking time to attend. Your feedback is a tonic to our soul, and it's tonic as we, repackage our strategy and keep it coming. I want to thank you for your time, question. Keep it coming. We sincerely appreciate you. Appreciate the feedback. Would like to thank all the shareholders for continuing support. It's been huge. Let me take this opportunity also to appreciate the board. The board, the clear direction from them, gives us real confidence as we go. The management group also strategic insights and direction. And also let me take this opportunity to appreciate the team, the total team of all our staff, and immense loyalty and continued dedication to work. We'll keep it coming. We are here, and we are here to be a major player. Watch out for us. Watch out for our shares. We are in it together, and we'll continue to delight as we increase your value for investing in us. Thank you so much. Until we meet the next quarter, wish you all the best. Thank you.